Good afternoon and welcome to Markets Today. I'm your host, Mwangi. Now, today is not one of your ordinary Tuesday afternoons because earlier in the day we had a State of the Nation address by His Excellency, President Uhuru Kenyatta. We will be giving you the touch points with regards to the economy and the markets for your benefit in a few seconds. Before that, let's take a look at what was happening at the Nairobi Securities Exchange. This January has actually been extraordinary with regards to the volumes that we have been seeing on the NSE. Yesterday, 837 million was traded with regards to turnover. It was a near 50-50 split between the local investors and the foreign investors. Which are the top trades over the day? Safaricom traded 10.76 million shares at an average price of 32.5. It was followed closely by Equity Bank that traded 2.9 million shares at a price of 54. KCB came in third with 2.3 million shares traded at a price of 54.5. DTB was another surprise mover, trading a couple of shares yesterday at a price of 120. Now for DTB, we have seen a bit of negative news coming through the pipeline with regards to the incidence of non-performing loans, largely affiliated with the closure of Nakumatt as a business. The owners of this business actually voted, rather the creditors voted for this business to be closed down. If this happens, then Diamond Trust Bank will be sitting with a bit of an exposure with regards to non-performing loans, closer to about the 5 billion mark, having been the largest bank to extend credit to Nakumatt Holdings. That aside, the president earlier today gave a state of address speech in the day and also reshuffled his cabinet. This is what we found very interesting. He was very adamant and he said we need to get out of being a political economy, a political kingdom where we are all stifled and focusing on what is happening politically. And he said we need to change our mindset if we're going to be able to build an economic kingdom. I think this was very refreshing to hear from the head of state. What were his focus points for the next couple of months? Firstly, he did say that there is the element of no cash in the economy, largely due to pending bills, either at a macro level, at a national level or at a county level. He did say that about 70% of the pending bills have been more or less cleared as at November following his directive. That said, he has instructed the National Treasury to continue to look at the pending bill situation and to make good what is owed to outstanding suppliers. That said, what really stood out was the fact that he will be seeking to raise about 150 billion shillings on an infrastructure bond, largely to make good this pending bills and ensure that money is flowing into the economy. That was the first thing that we had, at least from a fiscal stance. From a monetary stance, he did reiterate the benefits that he expects to see as far as the rate cap removal goes. The fact that we do no longer have a rate cap removal, he does expect that the banking institutions will aggressively begin to extend credit, especially to the micro and the SME sector. This is considered to be the backbone of the economy. In his speech, he did say about 80% of economic activity is affiliated to the MSME sector, and therefore there needs to be the case, or rather a lot of accessibility of credit by this sector. He instructed the Central Bank of Kenya to use all its regulatory powers as well as monetary policy instruments to ensure that the cost of credit is affordable to the economy and also come against predatory lending. And I suppose this was certainly an attack to some of the online platforms that have been lending credit at almost 200 or even 300% per annum. That's a positive. It's good to see the policy stance that are coming in. It's just a matter of time before we see how the banks will be able to reiterate. Recall, for the banking sector, when they did announce their third quarter earnings, banks such as KCB and Equity were very specific, saying they would give this scenario of the rate cap removal about 3 to 6 months to see what will happen, what CBK will say, what Treasury will say before they take an aggressive stance with regards to extending credit. The timeline was March. So certainly these pronouncements will aid in terms of what will happen and what the bank's reaction will be to His Excellency's sentiments. Two other key points that you need to be privy to. The agricultural sector was mentioned again by His Excellency, and he did say that there has been a continual incidence of cartels as well as middlemen who are taking off between 50 to 60% of the value of the goods that the farmers sell. Case in point, in the tea sector, the farmers are believed to get anything between 40 to 50 shillings from a price of 91 shillings per kg, which is actually sold on the market. The bulk of this benefit actually goes to intermediaries. He did instruct the Ministry of Agriculture to take a deep dive and understand what is happening here and to come against these cartels. And his message was this: the farmers are actually putting in the work and putting in the work, tending their farms, and actually coming out with output. And he did say that there's no reason why they should not get any benefit from that. Over and above that, he compared the Kenyan economy or the Kenyan tea to the Singapore tea. He focused on value add. We need to be able to add value to the tea that we export, as opposed to just exporting the leaf. And in this regard, he did extend a bit of financing to the agricultural sector with a focus of putting up factories to enhance the value of tea and also enhance the value of the milk products that we are seeing produced locally. Over and above the MSME sector, the agricultural sector, the final thing that the president was saying with regards to the economy is he wants to focus on the economy, and he wants the Kenyan population, all the 47 million of us, to be able to have a heart of gratitude in tandem with what the national anthem says. And it says that people should be able to invest, make an investment, come out with goods or services from where they're based, and be able to earn a requisite return for that. And in that regard, in as far as investments and markets today is concerned, we have seen a confirmation of Honorable Ambassador Yatani, who has been confirmed as the Treasury Secretary, and he has a clear mandate with regards to how he's going to be using the monies that come through the National Treasury to enhance development. He has a couple of factories that he will be setting up, and alongside that, just to enhance enterprise, he will be opening up a couple of open market centers and business incubation centers. One has been opened up in Kariobangi, and we have 2 or 3 that are already lined up, just to ensure that resources are going to the grassroots, and then we can be able to see whether the economy will do differently. Now, these are pronouncements, but in as much as there are pronouncements, there's certainly an indication of where the government focus lies, in as much as there has been a reshuffling of the economy. So what is really what we want to answer? Later on in the show, we will be looking at the outlook of the economy, looking at the macro, looking at the fixed income, looking at the economic outlook, as well as the real estate sector outlook. Cytonn has published a report putting all their thoughts together and coming up with what are their top themes for the year 2020. We will be discussing their top themes and trying to see, are these aligned to what the president wants to do, or they're not aligned. Thank you so much for being with us now. We don't want you to go anywhere. Stay tuned. Talk to us. What is it that you think needs to happen in your life at a macro level in investments for 2020 to make a difference? Let us give you the highlights and what you need to focus on after the break. See you shortly.